Good morning. You're watching All You Need to Know on Bloomberg Quint. I'm Darshan Mehta. Joining me on the show is Agam Vakil. Agam will speak about the FNOQs. I'll talk about the general trade setup. So let's take a look at what's happening with the Asian markets. So with the SGX Nifty, Asia as a pack is down in trade. The SGX Nifty is mildly down in the trade, managing to hold to the 10,450 mark in trade. So will we make a dash for a fresh lifetime high? I don't know. There's time to go. But as of now, it seems a muted opening. ADRs as a pack did well. Vedanta was up almost 1.5%. On London, Vedanta was up almost 4%. The other ADRs were up. Wipro as well as Dr. Reddy's were down in trade. So muted close for these two counters. Now, crude as a pack, surged almost 1.1%, be it Brent or NYMEX or WTI. The WTI moved above the $58 barrel per mark, and cues that came in from the US indicated the fact that the storage is dropping and orders are restarting, and that is why crude saw a significant amount of uptick that came in. Morning trade is trading rather muted. Now, as far as commodities are concerned, it was a strong close for base metals on the LME. Except for lead, there was a strong rally across all the commodities. So positive close by base metals. So nickel was up 2.5%, copper was up almost 1.5%. The other commodities, aluminium, tin was up in trade. Zinc was up 0.5%. Lead was the only one which was down in trade by close to 1%. Now, even in China, the commodity rally has been rather strong. The opening has been strong. Steel is doing extremely well. Copper is doing well. Aluminium is doing well. Rubber last time I saw was rather muted, but that's this normal setup. Trade for gold is trading higher for the second day in a row. Now, fund flows, FIs sold in a massive 1,500 crores in the cash market yesterday. DIs were net buyers to the tune of almost 146 crores. So you can see on a month-to-date basis, FIs have been heavy sellers. They've sold in almost 3,900 crores in the cash market. DIs, on the other hand, have bought in almost 6,000 crores in the cash market this month itself. Now, what happened with the Nifty? It snapped the 4-day rally. It was down by just 19 points. What did well? The real estate pack did extremely well. What didn't do well was the PSU banking space. So overall, the Nifty was down almost 19 points. So let's take a look at what contributed. Infosys, L&T, ICICI Bank and HUL contributed on the positive side. It was rather muted. So, but surprisingly, HDFC Bank and HDFC, despite fundraising, they were down in trade. Reliance was another counter which contributed on the downside. But Agam, what's the FNO situation like?
Again, Darshan, after the Nifty moved up substantially, we're looking at 1 day of consolidation, considering it's closed at around 10,444, with the open interest declining by as much as 1.3%. The decline in open interest in the bank Nifty is a little more deeper. So there you have about 6% decline there, with the index falling by as much as 0.5%. Let's also take a look at the India Volatility Index, which has remained unchanged, but the Nifty put-call ratio has moved up to around 1.49 as against 1.44, considering the Nifty, we've seen a little more change as far as puts and calls are concerned. Speaking of that, we have seen more writing in the 10,500 put. On the other hand, unwinding coming along in 10,400 and 10,300 calls. In terms of stocks, we're watching out for quite a few which have moved in and out of band. So Balrampur Chini and DLF moves into the band. On the other hand, something like a TV18 and Wockhardt moves out of the band. We're also keeping an eye on the Ramco Cements, where the stock has moved up as much as nearly 13%, and you've seen open interest nearly double. So we'll be watching out for that as we move into trade. Of course, do remember that there could be some amount of unwinding, but considering the strength that we've seen in Ramco, we just have to wait and watch whether or not that continues. But that said, the House Republicans has passed the most extensive rewrite of the US tax code in more than 30 years. And hours after the Senate passed the legislation handing President Donald Trump his first major legislative victory, what does it mean for corporate America? Rami Inocencio from Bloomberg wraps up in this report.
We are, of course, expecting President Donald Trump to sign that on January 3rd. That's according to what we're hearing, according to the latest news. But what it means for corporate America is just the enthusiasm that we're seeing in terms of the highest tax companies. Hop into my first Bloomberg terminal chart, and this is G#BTV7169. You see the yellow line, that's the baseline. Anything up above that, that means that the highest tax companies, according to a basket of Goldman Sachs, is doing better than the S&P 500. 500. Now look to the right-hand side of your screen. You're seeing that pop above the yellow line just in the past few days because we are seeing certainty. We did see certainty that this was definitely going to pass. But you can see also over the last several months that it had been under that line, showing that the S&P 500 was doing better. Of course, it was in limbo for several months. And you can see when you look to the left-hand side of your screen that there was so much ebullient, so much enthusiasm when Donald Trump was first elected, thinking that this corporate tax reform would pass early on. Of course, it didn't. But then again, several months later, this is where we are. Now let's zoom in a little bit more into my next Bloomberg terminal chart, G#BTV3316. Now this is a 1-month look in terms of what's happened. Now the white line here is that Goldman Sachs high tax index. The blue line is a Goldman Sachs low tax index. And you can see that that blue line has been flat over the course of the past month or so. But you can see that the white line has been inching up higher and higher, at least on this chart. But in terms of relative scale, for example, on November 28th, you can see the first bump up. That's when the tax bill left the Senate Budget Committee. Then on December 2nd, the Senate actually passed its first version of the tax bill. Then you look to the right-hand side of your screen. December 15th, key GOP holdouts, for example, Senator Marco Rubio of Florida, as well as Senator Susan Collins of Maine, both said that, you know, we are going to support this. And that we've seen that this is actually sustained that level of confidence and enthusiasm in the stocks ever since. All right, let's pull it back. We've gone closer in. Let's pull it back to the 40-year time frame. This is G#BTV8122 and my last Bloomberg terminal chart. I put this into focus because we're seeing that the corporate tax rate has actually fallen, has actually halved over the past 40 years. The red bars here are according to Republican White Houses. The blue bars are according to Democrat White Houses. But there is no mistaking these. These numbers don't lie, guys. The corporate rate has fallen to about 20.4% from about 40% 40 years ago. And looking at the white line, guess what? That's the personal tax rate. Has that gone anywhere? No, it hasn't. It stayed stagnant, up or down by around 15.5% where it is right now. Now, the question looking ahead is what is the real tax rate? What is a real effective tax rate moving ahead once Donald Trump does sign this, as he is expected to, on January 3rd of the new year?
And there are two news related to Reliance Communications. The first one is that the Reliance Jio is leading the race to buy Reliance Communications asset according to a Hindu business line. Now, Reliance Communication had already said that they are looking to sell their asset, but what is new is that Reliance Jio is ahead in buying this spectrum asset and the fiber assets of Reliance Communications. So why Jio might be interested in this asset? Firstly, Reliance Jio currently has spectrum sharing agreement with Reliance Communication, and currently they are rolling out 4G services using the 800 megahertz spectrum which they own, and also they are using the assets of Reliance Communication. So any sale of this asset could hamper the 4G services of Reliance Jio going forward. So this is the one reason why they might be interested. Secondly, in few circles where Reliance Jio owns asset, the validity of these assets is still just 2021, and in those circles Reliance Communication has assets validating till 2035. So this is the second reason, that is a longer tenure of Reliance Communications asset would make it more lucrative for Reliance Jio to buy those assets. And what are the other assets that are for sale put up by Reliance Communication? First is the fiber asset, which is around 1.72 lakh kilometer of fiber valued at around 4,000 crore rupees. Second is a tower asset. Now they have close to 44,000 towers valued at around 9,000 crore rupees. Third is the land. Now they have around 125 acres of land which is valued at around 10,000 crore rupees. Now the second news that is related to Reliance Communication is that the RCOM lenders, that Reliance Communication lenders, are set to meet soon to finalize on the debt to equity swap ratio. Then this is according to Bloomberg. Now the lenders of Reliance Communication are looking to convert around debt of around 7,000 crore rupees by issuing shares at around 24.8 rupees per share. Now this conversion price is around 43% premium to the current market price. Now yesterday the share prices of Reliance Communication closed at 26% higher, which is the highest surge that the share prices have seen since listing.
So while talking about Indian rupee first, it closed marginally lower against the dollar at 64.12 levels ahead of the release of RBI policy meeting minutes. Now the minutes of RBI policy indicated risk towards rising inflation and concerns over fiscal deficit, on which RBI Governor Urjit Patel commented that these concerns will keep RBI alert in the near term. Now on the global front, dollar slipped against other major currencies. It ended lower for the third consecutive positive session yesterday. However, it now trades steady near 93.30 levels. Now, this was despite the Congress approved US tax reform bill, as trading volumes are expected to remain thin throughout this week ahead of Christmas holidays. Now, while broad weakness in dollar helped the euro touch a 3-week high against the US currency, it now trades near 1.19 mark against the dollar. Elsewhere, the yen weakened ahead of Bank of Japan's policy meeting, which is scheduled for today. Now, the central bank is expected to keep monetary stimulus unchanged. However, traders will focus on their growth outlook for 2018. Now, coming back home, dollar rupee is trading at 63.98 levels against the dollar in the non-deliverable forward market, which indicates a stronger opening for Indian rupee in today's trade. Now, moving on to bond markets, sovereign bonds dropped, thereby sending benchmark 10-year yield to its highest close since July 2016. Now, yields ended 4 basis points higher at 7.22%, while global funds increased their rupee debt holdings yesterday. They infused close to 150 crore according to NSDL data. Well, that said, good morning, Jayesh. How are commodities faring out today morning?
Morning, Saloni. Commodities as a pack did really well overnight. Let me start off with oil prices, which actually climbed more than 1% overnight. That is for the Brent version. And WTI closed at the highest level in more than 2 weeks now. Now, this is backed by some positive inventory data that we saw from the US. EIA has reported that the US inventory declined as much as 6.5 million barrels for last week. So that's the positive coming in for oil prices. Moving on to the base metal space, we have seen the rally continue for base metals on the London Metal Exchange. The index itself closed higher for the 6th straight day and was up more than 1%. Most of the base metals climbed in trade, while lead was the only one that declined. So nickel was up 2.5%, which was the best performer, and lead was down 1%. Zinc posted the highest close in more than 2 weeks now and was up 0.5%. Goldman Sachs now predicts that there could be more gains going into the first half of 2018. Copper, on the other hand, was up 1.5%, and this was the 6th straight day that we saw gains coming in for copper. Aluminium was up more than 1% as Chinese production slumped to a 21-month low. And the base metals trade positive in Shanghai. If you look at copper, it's up more than 1%, and steel is strong as well, gains of 1% over there as well. But the Baltic Dry Index actually slumped more than 2.5% overnight and has now declined nearly 5% for the week. Moving on to the precious metal space, not many cues coming in from there, but gold futures have climbed for the 2nd straight day and have now nudged the 1270 mark.
Amongst the stocks that we are tracking today is SQS India, where the acquisition for the parent company has triggered an open offer for the Indian subsidiary. So the open offer price has been set at 475 versus the market price of 582. So we could see some negative reaction there. That apart, we're also tracking Varun Beverages, where the company will buy PepsiCo India's franchise territory in Jharkhand and also the franchise in the state of Chhattisgarh. So do watch out for that stock. That apart, the next stock that we are tracking and is on our list is HDFC, which has sold 6.3% stake in CAMS to Warburg Pincus for 210 crores. We're also, and they said that they will continue to hold 4.8% in CAMS. This is post the sale. You have Canara Bank, again 2 news pieces over there. It has floated a RFQ to sell 4 lakh shares of NSDL at a floor price of 805 per share. That will raise close to 32 crores. And they also said that the board will meet on 26 December to decide on a fundraising proposal. So do watch out for Canara Bank. You have a ET report which suggests that Dalmia Bharat will acquire Murli Industries for 350 crores. That seems to be a haircut of close to 80%. Do watch out for Dalmia Bharat. IVRCL, they have entered into a share purchase pack with Cube Highways and Infra to sell 2 arms. They will be selling 2 arms for enterprise value of 730 crores. We could see some positive reaction there. 2 QIPs which opened yesterday. First, Srikala Hasti Pipes. They set the floor price at 379 per share. And then you also have Kridan Infra, which is set the floor price at 102.82 versus the yesterday's closing price of 122. So that's a sizable discount. Let's see how the stocks reacts today. And lastly, you also have Pidilite, which will consider a share buyback on December 26th in a board meeting. So lots of stocks to track in trade today.
Minutes of the December Monetary Policy Committee released on Wednesday don't paint the happiest picture of the economy. The underlying narrative coming out from the minutes is one where members are absolutely not certain as to how quickly or how far growth will recover, but they're far too worried about inflation risk starting to pick up to do anything about growth. Let's talk a little bit about what they say or what individual members have said on the inflation front. Remember, of course, that the MPC had kept rates unchanged at 6% and also raised its inflation target mildly at its December meeting. Governor Urjit Patel, talking about some of those inflation risks, said that there has been an increase in inflation expectations of households. He also pointed to rising input cost pressures, which could then feed into output prices as well. And finally, he talked about concerns on the fiscal side, which, if they actually materialize, could have a bearing on inflation too. He did say that some downside could come in from vegetable prices once a seasonal downtick comes through, and lower rates of GST on certain items, about 200 items. Rates had been reduced in November. Some of that could help ease the inflation pressures. But broadly, Governor Patel was of the view that inflation is evolving as expected and there are upside risks to inflation. There were other members of the committee who expressed similar concerns. Viral Acharya, for instance, focused on rising oil prices and the impact that is having on the inflation trajectory. Michael Patra, Executive Director at the RBI, focused on the fact that inflation pressures were starting to get generalized already. Chetan Ghate and Pami Dua also had similar concerns and noted the increase in inflation that has already taken the inflation number to above the RBI's target of 4%. Remember, in November, inflation stood at 4.88%. Now, Ravindra Dholakia is the lone dove on the MPC and continues to argue for a rate cut. He argued for a 25 basis point cut and said that the real concern right now for the economy is growth and not inflation. In very strong words, he said that had the policy rate been cut to 5.75% in June, as I had argued then, the economic recovery would have been far more rapid. Although we have missed the bus, it is still better late than never. Now, Dholakia's concerns are focused on growth. That's not to say that the rest of the MPC is not worried about growth. Actually, the comments on growth are far from sanguine. Let's talk about, for instance, what Viral Acharya said. He noted that the output gap remains somewhat negative. You had Chetan Ghate talk about the fact that consumer confidence has weakened and that investment remains quite sluggish in the economy. The economy is missing animal spirits, as Ghate put it in his statement. Urjit Patel noted that growth has started to pick up a little bit. He also noted to some forward-looking factors that could suggest an impending pickup in growth, although a modest one. He talked about the recent large rounds of capital raising that we have seen from Indian corporates and Indian financials, and a pickup in credit growth, which could mean that there would be a slight modest pickup in investment, he said in his statement. But all in all, most members were of the view that the current rate, that is the repo rate, and the current stance, which is neutral, is appropriate for the evolving economic scenario. Michael Patra didn't vote for a change in stance or a change in rates at this point in time, but he did very clearly say in his statement that it's time to signal an end to this rate cutting cycle, which started in 2015 at 8% repo rate. You have now come down to 6% repo rate, and he thinks this is the end of this current cycle.
Reliance Naval is the second company promoted by Anil Ambani pushed into insolvency by its lenders after Reliance Communications. In November this year, IFCI, a state-run development bank, initiated insolvency proceedings against Reliance Naval as well as its subsidiary Reliance Marine on account of a payment default of a loan aggregating to 159 crores. Reliance Naval subsequently approached the NCLT requesting for a stay on these proceedings, given that the IBC itself is being challenged before the Gujarat High Court. While NCLT refused to grant relief, it has given the company a 7-day window to appeal against this order. Meanwhile, the proceedings against the company will continue on January 11th next year.
Well, in this case, what Indigo's plea was, it was basically a petition against the order of the Delhi International Airport Limited, or DIAL, which directed the company Indigo to and to some other companies to partially shift their operations from Terminal 1 to Terminal 2. Basically, what that means is that certain flights which are operating for Indigo to Delhi Airport, Delhi, Bombay, and Hyderabad, they were directed to be to start operating it from Terminal 2. Against this, Indigo had approached the Delhi High Court Court saying that this order of dial was arbitrary, but the Delhi High Court, as we know, has not accepted the plea by Indigo. And what small relief that they have got from the court is that the deadline for shifting of operation was January 4, but the Delhi High Court has extended the deadline, saying that that the partial shifting of operations now should take place by February 15th, 2018.
The Maharashtra government has notified the Maharashtra Shops and Establishment Act of 2017, which allowed the shops to remain open 24/7. This includes restaurants, cinema halls, shopping malls, medical establishment. However, it does not include places that serve alcohol. Now remember, currently the shops remain open until 9:30 p.m., whereas the restaurants are open until 12:30 a.m. As per the new law, the employee can work only up to 9 hours a day, whereas a weekly off is mandatory. If a women employee chooses to work in the night shift, that is between 9:30 p.m. and 7 a.m., she can do so only with her consent. This is expected to benefit around 35 lakh establishments across the state.
Well, some other stocks to watch out for and could be in action today based on the delivery volume as of yesterday. First up, we have Comm, which was up nearly 36% yesterday and saw delivery buying in excess of 50 crores. The delivery volume surged more than 3 times at 3.5 crore shares as compared to its 10-day average, and the total volume was up more than 4 times at about 30 crore shares versus the 10-day average. The second stock to watch out for would be Ramco Cements. It was up 13% yesterday and saw delivery buying of nearly 100 crores. The delivery volume surged more than 5 times at about 11 lakh shares versus the 10-day average, and the total volume too surged nearly six times at about 30 lakh shares as compared to its 10-day average. The last and final stock, Punjab National Bank, it was down nearly 5% and saw delivery selling of 600 crores. The delivery volume surged more than 500% at 3.5 crore shares as compared to its 10-day average, and the total volume too surged nearly 500% at about 7 crore shares as compared to its 10-day average.
On the big brokerages, first we have is Morgan Stanley on HDFC Standard Life. Now they have initiated coverage on the stock with an overweight rating and a target price of 425. Now according to Morgan Stanley, HDFC Life is one of the best plays on India's protection story. Now it has one of the strongest distribution franchises as it relies heavily on its parent company, that is HDFC Bank. Now the insurance company also specializes in protection, which is an underpenetrated market and a highly profitable segment according to Morgan Stanley. Now Morgan Stanley is expecting the company's protection premium to grow at a compounded annual growth rate of 44% over FY17 to FY20, and beyond that it is expecting it to grow at a CAGR of 20% for the next 10 years. They're expecting the return on embedded value to sustain at around 20% over the next 3 years, and VNB to grow at a CAGR of 28% over FY17 to FY20. Now they're saying that the near-term upside is limited because of the strong listing that the company had recently seen. They also have a bull case target price on HDFC Standard Life of 580 rupees. Now second we have is CLSA on Reliance Nippon. Now they have initiated coverage on the stock with a buy rating and a target price of 325. Now according to CLSA, mutual fund industry is in a sweet spot with rising penetration. Now they are expecting robust earnings growth and high dividend payout to aid investor returns when it comes to Reliance Nippon. Now they're expecting Reliance Nippon's asset under management revenue and net profit to grow at a compounded annual growth rate of 23%, 28% and 26% over FY17 to FY20. They're expecting the dividend yield of Reliance Nippon to rise to 3.1% by March 2020 versus 1.6% in FY17. Now they're saying that Reliance Nippon will leverage its strong retail strength, and the top line growth will mainly be aided by the rise in share of equity. Now they're expecting the rise equity portion to rise in asset under management to 40% by March 2020 versus 28% in March 2017. Lastly, they're saying that the cost of operations for the company would remain high.
After a 6-year trial, the verdict on one of India's biggest scandals, the 2G scam, will be pronounced in the 2G Special Court today. Former Telecom Minister A. Raja was alleged to be at the forefront of the scam, allegations that he has consistently denied. Some of the other accused named in the charge sheet are DMK Supremo M. Karunanidhi's daughter Kanimori, former Telecom Secretary Siddharth Berua, and Unitex MD Sanjay Chandra. Now, it's been a while, so you may not remember all the details, but here are the key highlights. In 2008, airwaves were allocated to mobile services providers on a first-come, first-served basis. Raja, the telecom minister, is accused of taking bribes to arbitrarily change norms several times to benefit select individuals and companies, overruling advice of the regulator and the Prime Minister's office. That's according to the CBI's charge sheet. The CBI has pegged the loss to the exchequer at nearly 31,000 crore rupees. The CAG had estimated the notional loss at 1.76 lakh crore. All the licenses allotted during Raja's tenure were ultimately cancelled by the Supreme Court in 2012. Now, a lot more details on that story on the website bloombergquint.com, and you'll find a lot more as well on the website. But that was all you need to know going into trade today. Indian Open will take you through market open. Do stay tuned. This is Bloomberg Quint.